Good morning, everybody. This is Patrick MontesDeOca with the Equity Management Academy live trading room. What you're looking at right now is the markets that we're trading basically in the day trading room here at the Equity Management Academy. And by coincidence, we have basically some activity overnight on the gold market, basically that you see here. The chart on the top right is the gold market, and we produced about $1,790 on a swing trade, which we're going to get into and show you how we did that. The silver market, we so far are up about $2,400. We day traded last night on a swing trade, made about $2,300, and we're up on a day trade about $100. And we're going to show you how we are executing these trades as well. But besides the futures markets, as you can see here on the charts above, we do trade also ETFs that are related to the metals markets, like the Jnug, which is the gold mining share, and basically we also trade in the crude oil market. As you can see, we have a couple of live trades at the present moment, and for the crude oil market, we use the ETF UCO to be able to take advantage additionally overnight, and we will get into a little bit of how we do that. But one of the things that we do here in the live trading room, basically, which is I believe what makes us different than any other room out there, is the fact that we make a point of preparing our subscribers before the market for the following day. And our subscribers basically get a password that they come in to the website here. They click on login, and basically it allows them to log into the members area that you see here. And on the right, you see a number of charts. Basically, it's about 5 charts that we produce. We prepare our subscribers a day before what to expect in the live trading room. And in here, for example, we're looking at the daily futures prices. You received this information by 7 o'clock Pacific Standard Time. And this gives you basically very specific instructions. The algorithm tells you the code levels that activates the buy signal, the levels that you should sell when. It gives you 2 levels, and it also, if it's a bearish signal, it gives you the targets below. And what you see here in this room is basically what we do. We implement these targets. For example, on a day trade here in crude oil, last night you would receive these algorithms that told you 48, basically 47.90 to 48.03 is a buy level, and this we're using the weekly indicators that basically are telling us here that we're at buy 1 level. They triggered a buy signal here once it closed above the code, and you can see the signal open and live and working into so far a profit of about $87. And so what we do in addition to this is we publish this information, and we send you as well a weekly report for swing trading purposes. And so we combine the daily algorithms that you see we post in the room, the very same algorithms that you receive the night before, we post in the room, and we trade them. And we basically show you how we execute and deploy the signals using this algorithm. We have another live trade here on Jnug. The signal triggered this morning by coming down into the VC code, testing it, and the close basically above it triggered a buy signal. And immediately when it triggers a buy signal, it gives you your stop level, which is the code below that we use to enter. It activates the target zone above, and we have an order pending to sell 500 shares for a day trade at 17.89. As the market gets there, it will activate the signal, liquidate your position, and go back to neutral, which is the logic of basically following the algorithm. What you're looking at here is the opportunity really to view the live trading room and to see how we apply this information on a daily basis by using the daily algorithms, as well as synchronizing the market into swing signals, which is what I want to get into right now. The report that you see here was published on March the 6th, which was based on the closing prices of Friday. And basically on this report, it told you that on Friday, the April gold contract closed at 1168, and the market closing below the 9-day moving average of 1237 is confirmation that the weekly trend momentum is bearish. But it also tells you that if it closes above the 9-day moving average that we use on the weekly charts, that it would negate this bearish short-term trend to neutral. So you have a flag in terms of when the trend reverses. The weekly momentum indicator tells you that because the price of 1168 closed below 1185, which is the pivot point for the week or the metrics for the week, that basically it confirms the price momentum is a little bit bearish still. But it also tells you if we close above 1185, this bearish signal would be negated to neutral. And it also tells you on the weekly price indicator, which is the algorithm, that if it comes down to the 1146, 1125 level, for you to cover your short positions and go long on a weekly reversal stop. And if you go long, use the 1125 as your stop level. And it also tells you right away when it activates the signal that you should be looking for targets to 1206 to 1244 area. The closest target would be the code above, which is the 1185. And what I want to do is show you here on the chart basically what the algorithm looks like, and basically what happened since Friday. And let's follow the algorithm. The market on the 6th, basically right here, it told you it closed at 1168, and it told you that because it closed below the VC code of 1185, which is the green line that you see, it's a bearish signal that targets the B1 and B2 levels that you see below. Yesterday, the low in gold was 1146.50, and it was close enough for activate a buy signal, which we did. And we took an overnight swing trade in using the daily algorithms, basically, that you see here. We were able to take some profits this morning. This tells you sell 1161. And so we bought it around 1147, and we sold it at 1161, right into the weekly buy one signal. The silver market basically, if you look at the weekly indicator, let me finish the gold here for a minute with a balanced position here that if you're long, you're looking at the weekly targets of 1185 as the initial target, but it also projects now the 1206 to 1244 areas above. These are the numbers that you see here in the report. In silver, last Friday, the silver market closed at 1593 and basically closing below the 9-day moving average of 1698. It's confirmation that the weekly trend was bearish. But it also told you that if it closed above 1698, that this bearish short-term trend would be negated. If you look at the weekly VC price momentum indicator of 1615. Because the close was below the indicator, we told you that it could come down to that B1 level of 1551 in as low as 1498. But that you should buy, it tells you right here that if we come down to cover short on corrections to the 1551 to 1510 levels and go long on a weekly reversal, stop and use the 1510 actually as your stop. The targets above basically are into that 1656 to 1720 area that we're looking at. So this is a very, very precise way for us to calculate the trades once we enter the algorithms here using the weekly algorithms that you see here. It's very clear. It's very clear for us what the signal is, and so the signal right now is basically recommending. It was a buy signal at 1551. We went long, as you can see, at 1551 here, and we're using our stop of 1551. Or basically you have the choice to add to your position down into that 1498 if you have the equity to hold. The buy one and buy two areas are the highest probability areas to trade on the long side, basically, in the highest risk probability that you don't want to sell into this. Let me go neutral here on the crude oil here for a minute. Go neutral on the crude oil at the market. Go neutral on the crude oil at the market. When we initiate a trade, the first thing that we do is we use a trailing stop to break even. And we choose to use this risk because if it does come down below the break-even point, the worst case is that you break even. And we look to trade again. This is the day trade position. We are holding basically a building a position on the ETFs such as UCO in the energy markets. With regards to the metals markets here, we are buying Nugt as an ETF, and we're basically are long on the Jnug as well. And you can see that the day trades that we have in this market so far are beginning to work for us. So what I wanted to show you is that how using the daily algorithms, which is what you have on the charts below, does work very well for day trading futures or day trading ETFs, and it does provide a tremendous level of support, a very objective, unemotional way of executing the trades, very specifically identifying the entry points, your stop, and your objectives. If you have any questions at all regarding the services that we provide, please don't hesitate to give me a call without any obligation. You can reach me at 805 area code 418-1744, or you can email me at support@ima2trade.com. This is Patrick MontesDeOca. It's been a pleasure to share this time with you in real time trading in the live trading room for the Equity Management Academy.